So this is where we are right now, week number 11 or 12, 12 or 13. Rename. So it has 11. So then working capital management practices. So therefore, we have to go through the working capital management practices today. So you all can download the lesson WCM. Okay. So then hope you all can see my slides there. Working capital management, is that visible to you all?
Yes, madam.
Okay, right. So you all can take down the heading working capital management or working capital management practices or decision, right? You can take down the heading, please write it there. Working capital. Working capital. So these are the learning outcomes that we have to go through. Introduction and then working capital management concepts. With that, we have to identify some sort of ratios as well. And then determination of working capital. We have 2 questions for that one. And then working capital management policies. We have 3 policies, aggressive and then all. So the last part of the lesson, 4th one. So before moving to the lesson today, so I will just explain with the finance statement of financial position where we are right now. So then you all know if it is come to the statement of financial position, there are 3 elements, right? But these 3 elements are liabilities and then the other one, assets and then equity, right? Liabilities, assets and equity. If you take the typical, the financial statement, normally asset relevant asset handling the decisions are taken by investment decision. Last week we have identified investment decision. NPV, IRR, all we are calculating for the current asset, the asset relevant, non-current asset relevant in items in the statement of financial position. So then liabilities, even it's not mentioned here, the liabilities, right? Liabilities and equity part. Hope you all can see my screen. Liabilities and equity, the way how the companies fulfill their equity requirements as well as the way how the companies fulfilling their long-term financial requirements with the debt obligations will be discussed here, the equity and liability. Definitely handled by which decision? It's we know that is capital structure decision. Capital structure decision. Then in this equity, we have a component called the retained earnings. Retained earnings. There are other components too. If it is a retained earning, we know last year profit is accumulated for this year accumulated for the next year and likewise. If there are profits or else if there are some preference shareholders, what we have to do is we have to definitely pay the dividend for them. So therefore, retained earnings, which is included in the equity, are linked with the dividends. Dividends. If it is dividend, definitely company have to obtain the decision, dividend decision. Dividend decision. Now we have identified asset, done investment decision, liabilities and equity. Actually, which liabilities? Long-term liabilities. So the non-current liabilities. Non-current current liabilities, and then the equity component are handled by the capital structure decision. And then one component within the equity component, within the equity is retained earnings. If it is retained earnings, definitely companies dealing with the dividend payments within the retained earnings. That means again finance manager involving there to have a dividend decision. Now, the remaining component are, right? If we are removing the non-current assets, and then if we are removing the equity there, if we are removing the non-current liabilities there, now within the financial statement, there are only two, but there are two only items to are considered, right? But these two items are actually the current asset. Now we are questionable on who is looking this current assets, or else which decision is looking at this current assets and then the current liabilities, and it is none other than the which decision? Working capital management decision that we are going to discuss today. Working capital management practices. Who is always looking at current asset, balancing current assets as well as balancing current liabilities. Right? Just to have an idea regarding what you mean by working capital management with the in line to the accounting perspective, right? So before moving to the lesson today, you just can take down the heading and write there within your lecture notes. Please do it. Write definition regarding working capital management. Do it. You all can write your own definition or search and write it down. Working capital management. What do you mean by working capital management? Quickly do it. Just you can write it down what you know about the working capital management. Okay, we'll ask from the students. Chalita. Chalita. Good morning, Chalita. Absent. Okay. Sumudu. Good morning, Sumudu.
Good morning, madam.
Okay, right. So what do you mean by working capital management or else working capital?
Working capital management refers to the process of managing company's short-term assets and liabilities.
Okay, very good. Companies need to manage the short-term liabilities and short-term assets. Okay, good. Right, thank you. So we'll go to the Ishara. Ishara. Working capital management. Absent. Lakshita. Lakshita. Good morning.
Good morning.
Good morning.
Okay. Right. What do you mean by working capital management?
Uh, how we have find money to long short term in
Very good, right? So how we are, how as a company, how we can find the money for the short-term requirements. Good. Right. We'll go to the last one. Charit. Last option, Charit.
Working capital management is the process of managing companies' short-term assets and liabilities to ensure uh, seamless operation in uh, in the operation.
Okay, good. Right. So working capital management. You all know about the working capital management, right? So what do you mean by actually the working capital management? Thank you, Charit. So it's managing current assets, right? Managing current assets as well as managing current liabilities for daily operations, for smooth running of the daily operations, right? So why we have to deal with the current assets and current liabilities? Obviously, we have to identify we have to fulfill the short-term financial requirements. There are two type of financial requirements we know. Last week also I draw the same format, right? So that is long-term requirements. We need funds, right? Company need funds. Company need funds. Companies need funds for what? For the long-term requirements. For the long-term requirements. The other one, short-term requirements. Short-term requirements. If it is long-term, we know that means acquiring a long-term asset. That means acquiring non-current assets and all. So then it is dealing with which decision? That is investment decision. Investment decision. But companies need funds in short run as well. Why? To run their, why the companies need funds in short run? To run their business operations, right? To run the business operation. Run. Run business operations. Running business operation in the sense, what are the main operations? What are the main operations? Sales and production. Production and sales. Right? Sales. If it is sales in the sense, you are directly with the balance sheet item, which is called as the debtors. Debtors. And then if it is production, you have to purchase the item. So then it is linked with the which one? Can anyone tell me if it is production? Students. If it is production, link with the balance sheet item. Which balance sheet item? Hope you can see my screen. Is it clear? Handwriting is clear to you all? Yes, if it is production, it's linked with balance sheet item. Which balance sheet item? You have to talk with me. answering.
Creditors.
Exactly, creditors. Very good. Creditors. Both cash received from the sales and then payment for the production, then involved with the cash also. Right? Cash also. Other than that one, to sell the items, what do we need? As well as to, once after we produce, we are getting something and that need to be sold to the debtors or the customers. What is that? We are producing items and we are keeping that specific item with us, and then once the customer comes, we sell that item to the particular specific item which I'm not mentioning here, and then but asking from you is selling to what? The customer. What is that? Yes, we produce and we sell. What is that item? අපි හදනවා අපි විකුණනවා මොකද්ද ඒ?
Inventory.
Exactly, very good. That is inventory. Again, right, inventory. So give me 1 second to just leave the Teams plug in my laptop also. So then it is very clear how you can see me. I can be a bit. This is recording, right? Yeah. Short term. Short term in the sense, again, we have 4 items. Go to a new page and then draw it. So we know we have 2 financial requirements. Funds need for short-term requirements. There might be short-term fund requirement and then long-term fund requirements. Long-term financial requirements. If it is long-term in the sense, you have to deal with the non-current assets, which is deal with the investment decision there. Investment decision. Now, if it is short term in the sense, again, right? Why the short term? In short term, we need funds to run the daily operations. Run daily operations. In effective and efficient way. So this is why do we need to funds in the short run. So then, if it is short run, What are the daily operations are? If it is short-run daily operations, definitely we have purchase and then we have sales. Main operations, right? Main operations. So if it is purchase, you are directly linked with the creditors. This is P&L item. This is balance sheet item, SOFP item. Right? So then daily item, daily operation, purchase, which is mentioned in the P&L linked with the balance sheet creditors. Daily operation, sales linked with the SOFP item, debtors. Dealing with the purchase in the sense and sales in the sense, indirectly we are dealing with the inventory. Inventory and then other one, cash. Inventory and cash. Then what is handling these short balance sheet items? Handling these balance sheet items, especially these are the 4 items that we need to handle. Other than that one, we might have accrued payments, we might have the accrued receipts, accrued prepayments, we might have sometimes short-term, other short-term investment, 3 months loan, 3 months investment, saving deposit and all, which is coming under current assets and current liabilities, right? All are impacting for running the daily operation. For example, accrued expenses. Accrued expenses, sometime prepaid, sometime pre-received, short-term investment, all are coming under the current assets and current liabilities, right? So especially these balance sheet items which is linked with the daily operations are the current assets, CA and then CL, current assets and current liabilities. So this decision handling these items which are mentioned in the SOFP as well as linked with the P&L and handling these daily operations, what do we call? This is what we called as handling the daily, these items, we call it as a working capital management. Working capital management. Hope it is clear, right? So companies again, companies need funds in short run. And then why the companies need funds in short run to run the daily operations? If they are running the daily operation in the sense there are 2 daily operations. First one is sales and then the other one is purchase. If it is a purchase and then sales, company again linked with the some balance sheet items. There are 4 balance sheet items: creditors, debtors, cash and inventory, right? Other than that one, we might have the other current assets as well. Then handling these current assets and current liabilities in short run to smooth running of the daily operations, we call it as a working capital management. Working capital management. So why companies need to handle the current assets and current liabilities? Because these factors are directly linked with the company profitability. Right? The daily operations which are mentioning through the financial statement of the income directly linked with the profitability, isn't it? If the company purchase is low, right? What happened? The profit might be low, but if the company sales is having a high sales, company reported a high profitability. So therefore, handling the daily operation impacting for the profitability, right? Profitability. Not only that one, it is impacting for liquidity as well. Liquidity, right? So how can we confirm the liquidity? We know liquidity in the sense the ability of company to convert its current assets and current liabilities into the cash. So therefore, if we have the particular amount, creditors, debtors, cash and the creditors, debtors, inventory and cash, we know that is highly impacting for the profitability, right? For example, if we have high amount of cash in the sense, what happened to the liquidity? Liquidity is high, right? Liquidity is high. Then if we have the creditors high balance, liquidity is high or low? Might be low. If we have the high inventory, liquidity might be high, right? Liquidity might be high. If we have the high purchase, profitability might be low. If we have the high sales, we might have the high profitability. Right? Therefore, companies in short run, companies have two main objectives. What those two main objectives are, right? Managing the profit, right? Managing profit. In short run, companies have two goals. First one, we have to maintain the profitability, right? We have to maintain the profit. The other one is liquidity, managing liquidity. Managing liquidity. So since the company want to have these two objectives in a smooth running, companies have to handle the daily operations, right? The main objective is company need to have profit and then may need to maintain the liquidity. To maintain the liquidity and profit, company need to handle the daily operations in a smooth way. In handling the daily operations, they are creating purchase, sales, debtors, creditors, and all the things, right? So the items which have been mentioned in the P&L directly linked with the profitability, and then items which have been mentioned in the SOFP confirming the company's liquidity position, right? Liquidity position. The items in the P&L confirming the position of the company in the form of profitability. So if I say this one, these two objectives where the liquidity and then the profitability are interrelated, right? Are interrelated. Why? Why? So we know if the company is having a high inventory, for example, if the company is having a high inventory in the sense that is directly liquidity is high. But if the company is having a high inventory, reflect what? Company is not having a proper sales policies. The company's sales are not properly happening at the current sense. So that means the companies do not have sales. Why the inventory is high, right? Why the inventory is high? Because of the low sales. Customers are not buying these items. That's why we have the high inventory. What happened there? So they are leave liquidity high, but the profitability is low. Sometimes profitability is high, but the liquidity is low, right? So then again think like this. Company is not maintaining the cash, small amount of cash. They are mentioning even the company is a larger company. They are mentioning the cash balance as 100,000. Instead of that one, what they are doing is they are trying to always acquire the raw materials and other required material. So then that's the policy. Low cash, but the acquisitions are high, which is impacting for the again high sales. What happened? Liquidity is low. Why? Cash amount is very low. If you are having a short run issue, short run financial issues, you do not have anything to settle because you have only sometimes you might have other balances as well. But what happened there? The initial thing that you can have for a short-term requirement or short-term financial issue is the cash. If you have the cash low balance in the sense, you are not safe, right? But in the sense, it is creating for what? It is creating sometime high profitability, causing for the high profitability. low cash, sometimes profitability. Sometimes the companies, what they are doing is, for the safer side, they are keeping high cash amount within their stores and all things. So then what they happen is they are not spending money on acquiring the raw material and all. So then what happened? Cash balance is high, liquidity is high, but profitability is low. So then this is interrelated, right? If the liquidity is high, profitability is low. If the profitability is high, liquidity is low. So therefore, this is interrelated, having an inverse relationship. As the finance manager, right? So what we are doing through this working capital management practices, you have to balance, right? You have to balance these two objectives. Balance these two objectives, short-term objectives, right? Short-term objectives. How the balancing these short-term objectives, we have 4 items to be managed within the working capital management practices. What these are? Inventory management, right? Inventory management, and then creditor management, cash management, and then debtor management. Companies need to manage these 4 main items which are included in the working capital management, right? Working capital management. So then if someone asks, what do you mean by the working capital refers current assets versus current liabilities, or current assets minus current liabilities. Working capital management practices, in the sense, the practices that the companies are adapting to engage or is to run the business operations in short run very smoothly, right? So in that sense, we have 4 working capital management practices: debtors, creditors, inventory, and cash management. Right. You can write this one. Okay. Hope you have written down the important concepts on the screen that I have already shared. So then we'll go to the next point. So this is the intro, what I have discussed. You can read. So we have, when it comes to the working capital management practices, we have two ratios, basic two ratios to identify the liquidity level of the companies. We name those ratios as liquidity ratios. What these two ratios are: current ratio and then the other one, quick ratio. How can we calculate the current ratio? Current ratio equals current assets divided by current liabilities. Current assets divided by current liabilities. You can note it down. Current ratio equals current assets divided by current liabilities. What is the standard rate for the current ratio? Can anyone tell me? Standard rate for the current ratio? We have 14 participants. Yes. What is the standard rate for the current ratio? Is that 1:1 or 2:1? තවත් මං easy කරනවා. 1:1 or
1:1.
sure? 1:1?
2:1.
Exactly, that is 2:1, right? 2:1. Two current assets, there should be one current liability. Right. Then the other one, quick ratio. Quick ratio. How can we identify the quick ratio? Current asset minus inventory plus. There should be other one. What is that? What is that? Inventory plus? Only inventory. No, what is the other item that you need to remove? Yes, you have discussed this lesson several times, as well as this is discussing by your corporate reporting lecturer with the ratio analysis lesson as well. So these are interrelated. Quick ratio, if you want to calculate the quick ratio, you have to remove two things. What those two are? Inventory plus මොනවාද?
Prepaid expense.
Exactly, prepaid expenses. Very good, prepaid expenses. I'll remove it. If you have the lecture note, please write it there, prepaid expenses. Prepaid expenses, you have to remove that prepaid expenses along with the inventory and then deduct it from the current assets and divide it by the current liabilities. As you said, right now the standard ratio is now not to 2:1, that is 1:1, right? So if it is a quick ratio, the standard rate is for one current assets after deducting the inventory with the prepaid expenses, there should be one current liability. 1:1, previous one 2:1, and then this one 1:1. When we are discussing about the current, when we are discussing about these current assets, current liabilities and all, which is coming under the working capital, right? There are two concepts to be studied. First one is cross working capital. That means the cross working capital in the sense companies focusing only about the current assets there, right? Companies cross in the sense company focusing about liquidizing or else the optimization. The actual word is optimization. Optimization of the current assets within the company, right? No need to consider about the current liabilities and how to settle the current assets, current liabilities from the current assets and all, right? Just considering about which one? Current assets. Investment in current assets is denoted by the gross working capital, right? So then optimization of the current assets. The other working capital type is, right? The other type is companies have to focus on the gross working capital as well. Sorry, gross plus the other one net working capital as well. Net in the sense that now the companies, the finance manager need to consider how the companies are settling current liabilities via current assets and then how much of amounts remaining for a balance as a balance to run the business operation if it is some liquidation issues, right? So therefore, current assets minus current liabilities or else considering current assets versus current liabilities is focusing by net working capital, right? Net working capital. So then definitely company have to consider what? Liquidity position, right? Liquidity position. Liquidity of the company. What do we have enough cash? Do we have enough short-term assets to cover our short-term obligation, short-term fund requirements? So that is denoted by then company is confirming overall liquidity position of the entire firm. Right. Now you all can take down the heading operating cycle, right? Quickly write it there. Operating cycle and then draw the company's operating cycle. I will give just 5 minutes. Take down heading operating cycle. Take down the heading operating cycle and then draw the company's operating cycle. Search and draw it, company's operating cycle. Operating cycle in the sense, starting from purchasing raw material to the collection of cash from the debtors. Draw this entire process as you know. I will give just 5 minutes for you to draw it. So then if the time permits, I will ask you to share your screen as well. Okay, students. Hope you have completed it. Drawing the operating cycle. If I ask you to share your screen, can you all do that one? Can anyone share the screen who have drawn with the operating cycle? Who have completed already the operating cycle? Yes. Sorry. Sumudu. Can anyone share me the what you have draw as operating cycle? Yes. Very good. Huh? Okay, just give me 1 second so then I can. Okay. Thank you very much. So I hope that is Sumudu or someone else who shared that one. Who is that?
Sumudu.
Exactly, right? Very good, right? So I saw some components you have started. Thank you very much, Sumudu, right? So you have started from which one? Started from?
Purchase raw materials.
Purchase raw material. Very good. Then purchase raw material. Then
Production process.
production process.
Finished goods.
Okay. Good.
Sales.
Very good.
Cash collection.
Very good. Right. Good. So with that, we'll draw this one. Yes. Now I will explain with the ratios as well, right? So we have some technical ratios. So therefore you can draw this one. Right. So as Sumudu said very correctly, we are starting with, this is really important. So therefore draw this. So as Sumudu said very correctly, we are starting with raw material. We are starting with raw material. Right? Actually, what we are doing is purchase raw material. Purchase raw material. Then what happened? The collected raw material directly converted to the finished good, but in between the finished good and then the raw material, there might be the halfly finished good. So then we'll call it as, therefore, that is work in progress. VIP, work in progress. Finished good, sorry, raw material converted to the work in progress. Raw material converted to the work in progress. Then work in progress, right? Then we converted to the work in progress to finished good. As Sumudu explained, finished good. Finished good. Now, raw material acquired and then completed the finished good. The thing is, you have two options when you are purchasing this raw material. You might have two options, right? What these two options are? It might be either cash, right? If it is cash, payment of cash, right? You can pay the cash to the outside of the counter. The other one is you can create a creditor, right? So just we'll just think. So this is Lakshit, right? Lakshita, who is a supplier, or who is now creditor. Creditor. Sumudu purchase raw material, right? On credit basis. This is Sumudu. Sumudu. Sumudu purchase raw material, right? From Lakshita, the creditor. Then, so within the Sumudu's company, they have created the raw material into the work in and then work in progress to the finished good. Done. When Lakshita is giving the items to Sumudu, he told us, he told Sumudu, even your friend at my class, you need to settle this payment for within 30 days. I need funds, right? Sumudu, you need to give the money within 30 days. 30 days, right? 30 days. We call this period as, right? Which period? Creditors, creditor, deferral period. Creditor deferral period or else creditor settlement period. Creditor settlement period. Right? How many days? 30 days. Now, in converting raw material to the work in progress, Sumudu have to spend 5 days. 5 days. Now look at your students, right? You have to, if you are starting this drawing here, this is, if this is the first line, right? If this is the first line, right? You have to at least keep 20 rows and then draw the our creditor there. කවුද අපේ ලක්ෂිත, right? මේක ලොකු process එකක්, ඒ නිසා ලොකු පිටුවක් අරගෙන ඇඳ ගන්න. ඇඳ ගන්නකොට මෙයා පළවෙනි රූල් ඇඳ ගන්නවා නම් මෙයා 20th කියන රූල් එකේ ඇඳ ගන්න. ලක්ෂිත. 20th. Right. Okay. Now, Sumudu has taken 5 days in converting raw material into the work in progress, right? So then we call this period as, right? This period as raw material. We acquired raw material, no? Raw material. Conversion. So these are mentioned in your lecture note as well. Raw material conversion period. Conversion period. Raw material conversion period. How many days? 5 days. Then second, now within Sumudu's company, she has the production team, they have taken again another 10 days. Another 10 days. 10 days. In acquiring, converting this work in progress to the finished good. Work in progress to the finished good. We call this time period as, right, work in progress conversion period. Done. Right? How many days? 10 days. Now we have finished good, right? Sumudu, finished good need to convert it for which one? For the sales, right? For the sales. Sales. Right now. How many days we are taking to convert the sales? Again, another 10 days. 10 days. Now this is called as which time period? Which has been converted and to which one they have converted? That is, we want to identify, right? Raw material converted to the work in progress. We call it as a raw material conversion period here. Right here. So then work in progress converted to the finished good. Right? We identify it as a work in progress conversion period. Now students, you tell me which one is going to be converted here now? Yes? Which one is going to be converted? Yes? Yes? Students. Now which one is going to be converted?
Raw materials.
Raw material converted. To the raw material converted to the work in progress. ගත්ත අමුද්‍රව්‍ය භාගයට කෙරීගෙන යන වැඩ දක්වා පත් කළා. අපි ඒ කාලයට කියන raw material conversion period. then භාගයට කෙරිලා පුටු 10ක් වෙනවලු ඇඳ ගහලා නැහැ කුෂන් එක ගහලා නැහැ. එහෙනම් යා මොනවද? නොනිමි වැඩතොග work in progress. නොනිමි වැඩ තමයි ඊට පස්සේ අපි finish good වලට convert කරන්නේ. එහෙනම් අපි ඒකට කියනවා work in progress conversion period. WICP conversion period. ඊට පස්සේ තියෙනවා අපිට නම් ඔන්න හරි. කුෂන් ටිකත් හරි, පුටු ඇඳත් හරි. දැන් එහෙනම් it is finished good. Already completed. So then it need to be converted for what again? What should be the next step? Inventory. Okay, inventory and then why are the inventory? It should be the next step, that is sales. Right? You have to convert it for the sales. So then we are identifying inventory in the sense we are keeping stock. So then you can't no point of having identification of the completed goods to the inventory because it doesn't create a value addition. So then we'll directly go to the sales. Right? හදපු බඩු විකුණන්න කොච්චර කාලයක් යනවද? Right? So then inventory into sales. Look at here, inventory into sales or else finished good into sales. Finished good. We call that one as, we have finished good, no? FG, finished good. Conversion period. FGCP, finished good conversion period. How many days? 10 days. Right. Entirely the acquired raw material ගත්ත බඩු converted to sales. We are naming this one as inventory. Right? Here also we have to report inventory once after you acquire the raw material. Inventory conversion period. How many days inventory conversion period? Can anyone tell me? Inventory conversion period, how many days?
$25 days.
Exactly. Is 25 days. Then we'll write technical formula for this one. So inventory conversion period equals, students tell me, I will name it as ICP, inventory conversion period equals. What is the technical formula? You tell me, I will write it there. RM, raw material conversion period plus work in progress conversion period plus finished good conversion period. Right? Finished good conversion period equals the inventory conversion period total. Right. Now that process done. That part done. So here we call the credit deferral period as CDP equals 30 days. Then we have sales. We have sales. So then we are creating cash sales or either credit sales. If it is credit sales, we create a debtor. This is, we'll take your example again, a lady from here. We have student Ishara. This is Ishara. Right now. Ishara is a debtor now. Right. When Sumudu selling the items to Ishara, Sumudu gave her how many days? Again, only 20 days. Ishara, even you are my class friend, I can't give a extended period. You just settle me the collected the cash for the collected goods within 20 days, right? So then 20 days, we call this period as the days that the customer is taking to convert it credit sales into the actual cash, right? Or it's the time period that the customer is taking to settle his balance. We call this period as debtor conversion period. Abbreviation DCP, debtor conversion period, 20 days. Now my question is, right, my question is, did particular creditor wait until the cash collected to settle his balance? No. So therefore, we can't always mark it there, right? So within here also, within 25 days, the particular raw material converted to the sales, but normal sense, sometimes creditors are not waiting for the cash until the companies realize their cash sales. So therefore, within the time period they made the cash sales, companies have to settle the collected balance from the creditors. The entire process A to Z, starting here A to Z. A is here purchasing raw material, right? To collection of cash from the debtor for the particular cycle. This is the entire cycle. We call this one as which one? What is the period? Can anyone tell me? This is gross operating cycle. Gross operating cycle. We know gross operating cycle then can be divided into two stages. What these two stages are? First one, starting from inventory conversion to the sales, which is called as inventory conversion period, plus what is the other one? Can anyone tell me? What is the other one? A to Z. A to Z. Exactly, very good. Debtor conversion period. Debtor conversion. So then again, if you want to rewrite this one, you can expand the inventory conversion into 3. That is RMCP, raw material conversion period, plus work in progress conversion period, plus finished good conversion period, plus DCP. Right? Expanded version. Hope it is clear. Now, if we remove the creditor deferral period from this entire gross operating cycle, it is called as, right? It is called as here, right? Up to here, right? We'll take it as X. A to X, that is 30 days. Here it is A again. A to X 30 days, right? A to X 30 days. That it is the creditor deferral period. If you remove the creditor deferral period from the gross operating cycle, මේ circle එකට යන මුළු කාලයෙන් අඩු කරනවා කවුද? Creditor deferral period. Creditor deferral period, we can identify this one as net operating cycle. Net operating cycle. NOC. NOC. Right? NOC. Or we have another name for that one, which is called as cash conversion cycle. Cash conversion cycle. So then letters are CCC or NOC. NOC or CC. Right, in this particular example, NOC is how many? We'll find out the GOC. GOC is how much? GOC, this is 25 days plus 20 days. How many days? 45 days. From 45 days, you minus 30 days, which is equal to 15 days for the cash conversion cycle. Cash conversion cycle in the sense, cash within the company, how many days that the company can keep the cash without having any sort of issues, right? That means the net days that the company having in cash inflows, the balances cash inflows for the particular cycle, we call it as a cash conversion cycle. Normally, if the cash conversion cycle is getting minus in the sense that is favorable for the company, right? Not the plus, but for the minus values are favorable for the companies. Okay. Right. Plain. Okay. Right. So then we'll identify the ratios, right? So this is what we have discussed. Don't worry, all are mentioned in the lecture note. And then just identify the conversion period, right? How can we identify the raw material conversion period? Very simple. As a company, you acquired raw material or acquire raw material inventory. So then divide the raw material inventory by raw material consumption for a day, which is they called as daily raw material consumption. Daily raw material consumption. So then you have second one, BICP, work in progress. How can we? We have work in progress inventory. හදපු ටික තියෙනවා inventory ටික තියෙනවා. එහෙනම් දවසකට finish කරන කාලේ, right? How can we identify that one? Because raw material are converted to the finished cost of good production. So therefore you have to identify daily cost of production. Third one, finished good. We know finished good conversion in the sense from the finished good we converted to the sales. Sales වලට තමයි convert කරන්නේ. Finished good inventory, but we are trying to convert it to sales. That is finished good. That finished good inventory. So then finished good inventory need to divide by cost of good sold. Daily cost of good sold. Daily cost of good sold. Right. Very basic formulas. We know it, no? Debtor conversion period. Debtors divided by credit sale divided by 360, or else debtors multiplied by 365 divided by credit sales. And then creditors, credit deferral period. Creditors divided by credit purchase divided by 365. Or multiply the creditors by 365 and divide by credit purchase. Both are correct. So this is what we have discussed. Gross operating cycle minus credit deferral period equals NOC. We'll go to the question number 1. This is very, very simple for you all. Quickly calculate the basic formulas, right? Basic formulas as given there for the particular years, right? The following figures, you can read the question. The following figures have been extracted from the financial record of Alec PLC for the year end of 31st March 25 and 24, right? All the balance sheet will items, right? Starting from here, trade receivables, payables, raw material inventory, VIP, and then finished good inventory. SOFP items. Right? And then you were given sales, raw material, cost of sales, all are P&L. Then what you need to find for these 2 years, you have to find 6 formulas. What these 6 formulas are? RMCP, and then WYPCP, and then finished good conversion period, and then debtor conversion period, and then creditor deferral period, and then if you can have calculate the NOC, DOC. Do it quickly. I'm not going to do it. You have to do it and share your answers with me. Right? So this is very basic. Is 9:54. So you can have your break, and then while you're having break, you can complete, and then you can come at 10:10. Sorry, 10:05, right? Have a short break. Someone who need break, or else those who do not need break, they can just start the question and do it. Or else some of you can have your cup of tea as well as do the question, right? Don't take too much of time to go to PNS, right? And then have your breaks. Therefore, you can have the break today at your homes. That is very easy to manage our break time as well as the balance question number 1, right? important. Okay. We'll start again. Can you all hear me? Students, can you all hear me?
Yes, ma'am. Can hear.
So, how many of you completed the question? Can raise your hands if you have completed your question. Yes, very good. Please raise your hand if you have completed this one. Only 1, 2, 3, 4. Okay, you can raise your hands. Okay, 5. Don't lower your hand. 5. Only, okay, 6, 7, 8. 8, 8, 8, 8. Yes. Sorry. Yes, students. 8. What happened to others? Okay, that means I have to do it, no? Right, I will just do it for the first one, right? RMCP, how much is the RMCP? Okay, thank you very much. You all can lower your hand. How much is the RMCP? How much is the RMCP? Raw material conversion period, how many days? Yes, how many days? No one is going to answer for me. RMCP, how many days?
18 days.
18 days, okay. Those who have completed the question number 1, they can go to the question number 2 and start doing it. Question number 2 is reverse side of the question number 1, right? So they are asking not the days, but the amounts. That means assets. Okay, let me share the presentation for my reference purpose. First one, raw material consumption period. So starting from trade receivables, no? Debtor conversion period. How can we find debtors divided by credit sales divided by 365. Debtor balance is how much? 5,000. And then for the 2020, that is 4,000 divided by Credit sales how much? 50,000 and 45,000. $365. How many days? This is 36.5 days. Is this correct? Second one, credit deferral period. Creditors divided by Can anyone tell me the answer whether the first answer is correct or wrong? Trade conversion period. මට කියන්නකො හරිද වැරදිද කියලා.
හරි මිස්.
Purchase is 20,000, 20,000. Credit deferral period for 2025, that is 54.75. That is 6.5 days for the 2024. Is that correct?
Correct miss.
Okay. Then raw material conversion period, RMCP, and then work in progress conversion period, and then finished good conversion period. Raw material conversion period, we know raw material inventory divided by the sorry, daily raw material usage. So then raw material inventory 2,000 and 1,000. Daily raw material purchase consumption, we have given the annual raw material usage 30,000 and 28,000. Dividing by 365. $24.3 days. This is 13.03 days. Work in progress conversion period, we have work in progress inventory 1005 and the other one 1000. For 2024, that is 1000. Okay, we have to identify the raw material, the work in progress conversion period by dividing the cost of production or cost of sales. Cost of production. So therefore, cost of production is 30,000 and then it is 29,000 for the 2024. It is 0.25 days. $12.58. 12.5. FGCP, finished good conversion period, we have finished good inventory 4,000 and 3,000. So then dividing by cost of sales 45 and 44. So can you check whether these answers are correct or wrong? And then we can directly, as a last point, you can calculate the NOC and then GOC. GOC in the sense gross operating cycle. I will write it there. Look at here. GOC. How can we identify? We know debtor conversion period. I will just do it for 2025. GOC for 2025. 36.5 plus 24.3 plus 18.25 plus 32.4. $36.5, 24.3, 18.25 and then 32.4. 111.45. Please. That is gross operating cycle. So then shifted to the net operating cycle. NOC, how can we calculate NOC? From the gross operating cycle, that is 111.45 days minus the creditor deferral period, 54.75 minus 54.75. That is 56.75 days. This is for 2025. Is that correct? Is that correct? Yes, students, can you respond me? Is that correct?
Correct. Correct.
Okay. How much is 2024 one? 2024 GOC, you just need to add 32.4 and then 13.03 plus 12.58 plus 24.8. That is 82.8.
8.
Very good. 82.81 days for GOC. Ishara, how much is NOC for the 2020? 2024. 2024, tell me NOC is how much? 82.81 minus 36.5. How many days? Ishara, how many days? Ishara missing. Yes. How many days, Ishara?
46.31.
Sorry. Exactly, 46.31 days. Good. By looking at these 2 years, 2025 and 2024, which year is best? Which year is best? 2025 or 2024? Yes.
Twenty-four.
24. Yes, exactly. Very good. 24. Why it is? 24. Why 24 is good? With compared to the 2025, 2024 is having the lowest balances for these ratios. That means if they want to have the gross operating cycle, right? If they are the time period that they are spending on converting raw material into the collected cash, only the 82 days with compared to the 2025, right? But 2025, they have to spend more than 100. That means how many days? More than 3 months, right? More than approximately 3 months, right? Around 3 months then time period to convert their raw material into the cash collected from the debtors. So then that is disadvantage for the companies compared to the 2024. Why? They only have spending 82 days the 2024, right? So therefore, definitely companies need, if you have been asked to comment on the efficiency, which year is having efficient policies and efficient practices, that is 2024, since the NOC and GOC is lowest than the 2025. As remedial actions, what you can do? What are the things that you can do? If 2025 needed to be re-amended for the 2025, for what sort of practices that you can do in practical context? You can ask the extended period, right? So you can have the efficient, the work management, the efficient marketing policies, right? And then you can move, or else you can giving the discount to the debtors and ask them to settle their balances. Likewise, you can have the remedial actions if there are some inefficiencies happening at the short-term liabilities as well as current the assets. So therefore, these are the some of practices that you can have to mitigate the inefficiencies in the working management practices. You can refer those things. We'll go to the quickly the question number 2 then, right? Question number 2 is the reverse side of the question number 1, right? So we just did the question number 1 to have a practice on the formulas, but this is something you need to think why this is not asking the days, this is what they are asking current assets and current liability amount, not days. But you were given the dates and then you were given some figures. What you need to find is the working capital requirement for to produce the 50,000 units. Okay, students, you can read question. You can read the question. A manufacturing organization is having the following analysis on their cost and selling prices, right? Raw material per unit cost is given to us 32, right? Direct labor 19.5, direct other 10, overhead, production overhead 39, factory cost 105, non-production overhead 10, total cost 110.5, profit margin and then selling price is 130. Okay, but then the company asks. The company has estimated the following, right? Average raw material stock, how much is it? And then finished good should be 1 month. Students should be 1 month. That means 30 days. Now the dates were given to us, right? Raw material process is the half of month. That means 15 days. Previously, we calculated these days. In this case, we were given the dates. Creditor period, CDP, how many dates? 1 month, 30 days. And then half of direct labor were the raw material, half of the direct raw material versus were the credit basis. Creditor period, 2 months, that means 60 days. Direct labor, 1.5 weeks, we know 52 weeks per year. So then you have to convert this. You have to now take as not the basis as 365, but the base should be weeks, 52 weeks per year. Sales, 1/4 is cash. That means 1/3 is, right? Sorry, 75% is credit basis, cash balance 10,000, right? What they ask, calculate the working capital requirement for how many units? 50,000 unit. If you have the highlighters, highlight this one. This is most important. 50,000 units. 50,000 අදනවනම් කොච්චර working capital එකක් ඕනද කියලා මේ question එකෙන් අහන්නේ. Okay, students, we'll start, right? How can we start? What it does, they ask the working capital requirement, right? So we know working capital. Working capital requirement for 50,000 units. 50,000 unit. We know working capital in the sense current asset, CA, current asset minus CL, current liability. So then you can have the working capital. Working capital requirement. Current assets. As per the question, what are the items coming under the current assets? If you are producing 50,000, you have to identify how many current assets and how many current liabilities should be there, right? So then, first one, as usual, inventory. There might be Raw material inventory, there might be inventory. WYP, there might be inventory. FG, finished good. And then, second main item, we know, debtors. There might be some debtor balance. And then, other one, what is it? Debtors, what else? As per the question, we were given the cash balance. Can anyone tell me the cash balance there? That is 10,000. So you have to find this debtor balances. Right now, hope the process is clear. We can impact the question. If it is regarding current liabilities, you definitely have to find the creditor balance, creditors. And then there is some accrued payment, where you can take the same base for the creditor. So then you have to find these. And then from the current assets minus current liabilities, and then have the required amount for the required amount for the working capital for it to produce the 50,000 units. Right. Now, okay, how can we start? Very easy, right? So we'll start as per the given information. The first information is regarding what? It's regarding what? Raw material stock and finished good inventory. We'll draw it, we'll write it. You start. Raw material inventory. We know raw material conversion period equals. Look at here. If you catch the first one, then it's very easy to go with the others. Right? Raw material consumption period equals. Students, can you tell me the way of calculating it? Raw material inventory. Divide by raw material consumption by 365. 365. Right. Okay. Raw material conversion period, how many days? Raw material consumption period, how many days? Sumdu, how many days? Raw material inventory holding period, how many days, students? Average raw material stock.
30 days.
Exactly how many days? 30 days, ne? Right. But we don't know raw material. Therefore, we can put it as we don't know it. No, that is what we need to find. Ne? Look at here. We need to find raw material inventory. That is what we don't know. Produce the 50,000 units. Raw material consumption we know. Why? Per unit requirement is how much? 32. How many units that we are going to produce? Lakshita, how many units that we are going to produce? Lakshita, how many units that we are going to produce?
50,000 units.
Exactly. That is. Then we have to find the daily consumption. No? So then divide by 365. Now raw material inventory. You can find the raw material inventory. How much is it? Find it. $32 multiplied by 50,000. Yes, students, you can tell me the raw material inventory. How much is it? How much is the inventory? 100.
31,507.
131,506. Okay. You bring that 131,506 to the balance sheet that we have already created. 131,506. I hope the process is now clear, right? Then, as per the information, second one, finished good. Now we know finished good conversion period equals FG inventory. Where we are right now, this is you have to find. How can we find? Finished good inventory, cost of sales. Divide by 365. Right? Finished good conversion period again. Same days, 30 days. FGI, we don't know cost of sales. Now the cost of sales, you have to find it. Cost of sales, how much is the cost?
See
Cost
that.
of sales? Exactly, 100. 110.5. How many units? 50,000 units. Divide by 365. FGI, how much is it? 454,109. Am I correct? 450, 409. Am I correct or wrong?
Correct, miss.
Okay, right. So then next one. Average raw material in progress is half of the month. I will shift it to the next slide. Now, that is called as VIP, work in progress conversion period. We know VIP inventory divided by cost of production. Cost of production divided by 365. 15 days. VIP we don't know. Inventory we don't know. අපි දන්නේ inventory කියලා තමයි අපි හොයන්න යන්නේ. Cost of production, how much is it? 100.5 for a unit, but we had to produce 50,000 units and then divide by 365. It is 6,506. Work in progress inventory. Am I correct?
Correct.
Okay. Now go to your balance sheet. Go to your balance sheet. Record VIP inventory 6,506. Now only we have 3 more. Right? What these are? Debtors. We have to find the debtors, creditors, and accrued payment. So then the question done. Okay, we'll go to the next one. Debtors. We know debtor conversion period equal debtors divide by credit sales. Credit sales divide by 365. Debtors we don't know. So then debtor conversion period we know it. It's given there 2 months, 60 days. Credit sales. All sales are not credit, only the 75% is credit sales. So then per unit selling price is 130. එකක විකුණම් වටිනාකම 130යි. කීයක් විකුණනවද? 50,000යි. හැබැයි ඔක්කොම sales, credit sales නෙමෙයි, only 75. This is the amount for the credit sales, right? 75% is only the credit sales. Others are 1/4 is cash. Then divide by 365. The answer is debtor balance is 801,369. Is this correct? $801,369. Debtor balance. Next one. Creditors. Creditor deferral period. We know creditors divide by credit purchase divide by 365. We don't know creditors, right? That is there. That is what we are going to find. How many days? One month and 50% of the material is only the credit basis. right? 1 month. 1 month in the sense 30 days. 30 days. Purchase 32, raw material 32. Only the raw material 32. Right? How many units that we are going to produce? 50,000. But half of this is only the credit purchase. Half of it. 50%. එහෙනම් දෙකෙන් බෙදුවා නම් හරි. This is credit purchase divided by 365. Creditor balance is 65,753. If you want, you can take the decimals as well, right? Write the creditor balance there, 65,753. The last one, accrued payment, right? Accrued payment. You can again take the base of the creditors to identify the accrued payment, right? Okay, we'll do it. That is something new, might be new to you all. Accrued. Accrued payment period equals. We have to find accrued payment, that is we don't know, divide by consumption, right? So this is for which one? Direct labor consumption. Direct labor consumption divide by 365. Accrued the amount that we don't know. Accrued amount we don't know. Accrued payment period we know, that is how many days. Rather than dividing this by 365, we can directly put there the 50 days, 52 weeks. It is 1.5 week. Direct labor consumption, entire direct labor is accrued term. So therefore direct labor is 19.5. 19.5. For a 1 unit 19.5, we are producing 50,000 units. So then entire consumption should be divided by 52. 19.5 multiplied by 50,000 and then divided by 52 multiplied by 1.5. That is 28 accrued payment. Accrued payment 28,125. Time to time I'm looking at your screen. Hope it is clear to you all. Handwriting, hope it is clear to you. Right. Then last point, accrued payment 28,125. Now we are tasked at the total of CL, at the total of CA, and then calculate the working capital requirement. Total current assets, I will start from the total current asset. This is 93,878. And then here it is 131,506, 206,506, 450,409, 801 and 369, and then 10,000. 1,600,600, 3,490 minus 93,878. The answer is 1,000,000. 509,612. Students, can you check whether the answer is correct or wrong? The working capital requirement to produce 50,000 units is 1,509,612. Can you raise your hands if you have received the answer? Good. Very good. If you have received the answer, quickly raise your hands. Very good. Good. Great. Right. So if the question asks, okay, thank you very much. You can lower your hand. We'll go to just question. So question having two sections. The first one is capacity, calculate the capacity, and then calculate the length of operating cycle, and then the cash conversion cycle. Sometimes just think it at the examination you were given for this one for the 10 marks, and then calculating operating cycle and then the cash conversion cycle only 5 marks. So then what question that you are going to start first, don't start this one, start this one. Why? By looking at the question itself, you can have the 5 marks within 1 second by calculating the NOC as well as the CCC. Why? You were given the dates, right? So then we'll go to the calculation of operating cycle. Just I will calculate here itself. Right. You can support me. Gross operating cycle. We know inventory conversion period plus debtor conversion period, right? We'll calculate inventory conversion period. Raw material, finished good and 1 month. That means 30 days. VIP will mark it blank and then the other one 30 days. DCP, how much is it? Debtor conversion period? 60 days or 2 months. Here, VIP inventory, how much? Second point, average raw material in progress is half of month. That means 15 days. Very easy. 30, 30, 60, 120. Total is 135 days. මේ වගේ සමහරතෙන් තියෙන්න පුළුවන්. බොහොම පොඩි තැන් අහනවා. So then the other one, cash conversion cycle. NOC or CCC, cash conversion cycle, we know gross operating cycle එකෙන් කවද අඩු කරන්නේ? Gross operating cycle minus creditor deferral period. NOC, GOC, that is 135 days. It's given in the question itself. Creditor deferral period is 1 month, 30 days. So therefore, NOC, that is 105 days, 105 days. Right? Very simple. You can have the 5 marks within the 1 second. Right? So therefore, please, I request you to understand the question first. Don't be hurried to do the long calculation first. Read the question. Sometimes the sum of the question that you have been asked, even the answer on the page, the question itself. Therefore, you should understand the question first. So then remaining the theory part, you can read that one and refer. So then up to this point, I hope it is clear to you all. If you have any questions, you can raise now. Until I'm sharing the QR code. If you have any question regarding this one, the working capital management practices,